Hey, hello my friends, welcome back to my channel. Today I want to show you or go with you over Q3 earnings call from a company called DHT, Double Hold Tankers. I own position in this company, and in the end of this video I will give you my decision if I will buy, sell or hold. Before we go any further, please note that I am not a financial professional, I am just a retail investor, and therefore you should do your own research and consult with professional before investing in anything. So, what is VLC? What is DHT? DHT operates oil tankers in the VLCC, very large crude carrier segment. Basically, the ships, they are so big they don't fit the Suez Canal. They also don't operate in the Baltic Sea because the Baltic Sea is, in the most of the part, not deep enough for these ships. Yeah, this company is, they have a good management. This I like about it. They invest counter-cyclical, and when you are in the crude oil carriers, you should keep in mind this is very cyclical business. When the business go good, the companies try to order new ships, but there are only, I think, 4 places on the world that produce these ships, and therefore the production of the ships take very long. And when the business runs bad because of microeconomical stuff and so on, these companies try to scrap their old ships to get a scrap metal price, so they don't need to pay cost of keeping these ships alive. The thing is, the world fleet in average is very old. These ships have only a limited amount of years they can serve. It's about 20-25, and thereafter the cost for the operation of the ship is so expensive that it's not economical anymore. DHT, because of their anti-cyclical approach, they have relatively young fleet, around 10 to 15 years old, which is younger than the average in a world fleet. And they pay a good dividend, currently around 8%, and this is the main reason why I am invested. So when we look at the numbers, they declare that they have the total assets ratio of 17.6%. This number don't tell us much, so we will look on the next slide where they show us that on the beginning of the period they had 72 millions. They earned 70 millions on the EBITDA. From this they pay back the debt, they pay the interest on the debt, they pay the dividend, maintenance, capex, and they are ordering new ships. Yeah, so this leaves them with 73.8 million on their balance sheet in the end of this quarter. As we see on this slide, they have approached, they want to pay generous dividend if they can afford it, and this we see on this slide very good. The dividend is not stable over the years. The dividend is all over the place. So what I expect is, if the economy is good, if the business runs good, they will pay a very generous dividend and compensate therefore for the years the dividend is not as great. Yeah. So if we look on the debt situation they had, They in the next quarter are expected to pay around 8.8 millions on their debt back. In 2025 is 80 millions, and 2026 is 54 millions. If we go back where it was, sorry, here. So if we look what they approximately earned in past in each quarter, they can afford these debt repayments, and that's important for me. So in their earnings call, they speak also about their outlook. They are expecting more oil demand from China, which can also boost their business. Also that the companies in the US now producing more oil as the risk. They can see the situation in Iran, where they maybe there will be blockage on the oil, so the Iranian oil don't get on the market, which can impact their business. But then they expect that there will be some subsidies from the Saudi Arabia and other countries. So my opinion on DHT is a very cyclical business, and as I showed you here, the dividends are all over the place. The analysts are expecting on the average price in the next 3 years around $13, which is between 25 and 30% increase from today's price. So you cannot expect much price appreciation from this stock. So I am holding my position. I am enjoying the dividends they come. This is the main reason I invested in this. But because I cannot expect a reliable, stable dividend, I don't want to make this a very big position in my portfolio. If something happen in economy, and as I told, this tanker business is very cyclical, the stock will crash massively. In that case, they will probably also not pay a big dividend. I think this is the good time to buy this kind of stocks. They have a good conservative balance sheet and long-term outlook, long-term business plan, so they can afford 1 or 2 years. If the demand is lower, this will not impact their balance sheet significantly. So this was my opinion on the DHT, not financial advice, of course. If you like it, give me a like, and I will also be happy to see feedback from you in the comments. And until the next time, bye.